Okay, so we just have a bit of a lull here in the trading, so I'm going to quickly go over TVIX. So what is TVIX? And its sister is UVIX or UVXY. TVIX is 2 times leverage, and it's very, very complicated. Very complicated. The formula. I mean, I have an MBA in international finance, and even I don't understand it. Of course, I'm just kidding. I do have an MBA, but I don't understand it. But let's just talk about what it is. The VIX is what's the best way to explain this? It's an electronically traded note. TVIX is not an ETF, it's an ETN, electronically traded note. And it's tied to the S&P 500 futures, VIX futures, which in itself is a measure of implied volatility of the S&P 500 index options. So what does that all mean? Well, it's tracking the volatility of the market and this market sentiment. It reflects the S&P in an inverse, in a perverse, but as well as inverse section. And this one, TVIX, is 2 times leverage, so it's very, very volatile. But in effect, it mirrors the opposite of the SPY, but they're not quite correlated. As you could see earlier in the day, when the SPY had not broken down yet, but TVIX had popped out of the resistance area here at 2940. The SPY itself had not broken down. It was trading up in here when TVIX broke out to the upside, and SPY had not. So, and that's because this is, in a sense, it's anticipating the volume or the volatility of the SPY when it moves like that. Just trying to. There's a formula. I'm just looking for the formula for it. I was going to just see what the formula is for it, but it doesn't matter. Suffice it to say, for our intents and purposes, it's just it's the inverse of the SPY, and we trade it as such. The technicalities behind it are not so important. If you want to get a very good understanding of it, you can research it on Google, on the internet, and if you figure it out, let me know.